The information in this podcast is general information and not advice. Stanford Financial is authorised under Australian Credit Licence Number 541480. Further information is available at stanfordfinancial.net.
Okay, hello and welcome to On the Couch with Steve. This is a podcast where we help you navigate the often complex world of buying, selling and renting real estate here in Ipswich and the wider area. I'm Steve Athanates. I'm the owner of NG Real Estate here in Ipswich. We're talking today about the latest Reserve Bank of Australia announcement and what that means for you. I'm joined today by Steve Beach from Stanford Financial. Steve's a regular on my podcast. You may or may not notice we've on new chairs today. We've had a significant budget increase and they are very, very comfy, just in case anyone was wondering. Steve, how are you?
I'm very good. Thanks for inviting me back again.
Mate, always a pleasure. Love to have you on the podcast. Now, obviously, within the last 30 minutes, we've just had the Reserve Bank of Australia announcement on what's happening with interest rates. Without any further ado, I would have a drum roll, but we can't afford that. So, straight over to you, what happened today?
I guess good news in the short period. So we did have the rates go on pause. So we are still sitting at 3.6% as the cash rate goes. I guess what Phil Lowe has said, who's the governor of the Reserve Bank, they need more time to essentially evaluate what's happening with the economy. So we actually have seen a decrease in inflation down from 7.4 to 6.8, which is a little bit less than what they were actually expecting. Which is good news moving forward. Unemployment is still at record lows at 3.5%. So I think that in turn will probably want to see the full quarter's actual results over the next couple of weeks before they make any sort of final judgment calls in May for the next potential rate rise. So I don't think we're out of the woods just yet. So good news moving forward that we're not going to see another rate rise today, but I guess we'll probably have to still see and wait to see what happens next month.
Okay, so to recap, no increase in the official cash rate. Okay, so no banks are going to independently pass on any rates?
I don't believe so, not on a variable rate basis. It's actually been interesting since the last month and more so probably what happened with the US banking system, which is now sort of flown into more of the global banking system, so over in Switzerland and stuff like that as well. It's funny, we actually saw a couple of banks lift fixed rates and we saw a majority of banks actually drop fixed rates. So I think even the banks themselves aren't 100% confident in what's actually moving forward. Everybody's sort of predicting that there potentially is 1 to 2 more rate rises, which is sort of what we spoke about last time, which I think they might be short and sharp. And then ultimately by the end of the year, I think we will start to see interest rates to start to come back down. So I guess inflation and the economy is moving in the right direction of what the RBA have planned. We're in restrictive monetary policy. So basically they've put us in a position where we're stopping spending money. So cost of living is going up, utilities are going up, rent is going through the roof. Like that's a big, political nightmare at the moment with some of the rules and laws coming into place, particularly in Queensland where you can only now do 1 rental rise per year.
Yeah, that's going to be really topical. That'll be a subject for another podcast, but I like it.
And again, interesting data coming through as well. So we had CoreLogic, which does all sort of the real estate market, and we've actually seen probably the lowest point of the real estate market. So in last month's results, we actually saw a 0.6% increase in property prices. So
that's exciting.
It is exciting. So
if you're a seller, great news.
Definitely great news. I guess even if you're a buyer, we're at the bottom of the market. It's only going to go up from here. So
they should buy now.
Buy now.
Buy right now. Everyone buy right now. Buy right now.
If you can afford it. So, and that's a big thing we're seeing still again coming into the financial sector is people with these astronomical rents paying $700, $800 per week in rent, moving a bit further out from their comfier suburbs. The mortgage repayments are equivalent to what these rental repayments are. So we're seeing, again, a lot of first-home buyers coming into the marketplace just due to being forced to move into that space.
Okay, well, look, obviously, some great news. I think there's many more positives there than any sort of negatives. You've indicated that there's still a possibility we may still get some increases in rates over the coming months, but at the moment, they're on pause. Obviously, inflation's going down. Employment's still at record levels, and house prices for the first time in, is it
10 months?
10 months?
10 months.
First time in 10 months we're seeing house prices across Australia have actually increased. So median house price in Sydney's now ticked back over $1 million, I believe.
Over $1 million back over.
Okay, so there's some good news there. So obviously I listen to a lot of different sources of information about what's happening in those marketplaces. Auction clearance rates in Sydney have improved quite dramatically. We are now starting to see a much stronger level of buyer confidence. Okay, so and I think that confidence should extend all the way through the marketplace. Confidence to sellers that they can sell and still get a really good price.
Definitely. Confidence
For buyers that even if they do invest, it's more likely than not that house prices are going to continue to rise over the longer term. So their equity position will actually build if they take the leap of faith and buy today.
And that's, again, another particular point is, I think I mentioned it a couple of podcasts ago, is through COVID we saw so many mum and dad investors where they have their own house and have one investment property sell those investment properties, which put that massive demand into the rental market. We're starting to see those people come back into the marketplace to buy investment properties again, which in turn, which is probably part of the reason why I think the real estate market's starting to increase again, is because the perceived, I guess, rental investment that you can get back on that buying another property is greatly outweighed by the high rental prices at the moment, which is not great if you're a renter, but if there's more properties coming into the marketplace, means the demand on rent will start to ease. Same like inflation with the RBA consistently lifting rates. We might start to see that the rental prices start to plateau at least, or even come back down once rates sort of come back down as well.
And in a previous podcast, we talked about expectations for 2024 and even into 2025. Based on what's happened, obviously we've seen 4 banks in the US go bust. We're now seeing I guess monetary policy in Australia changing as a result of that. What's your prediction now for even the next 6 months leading towards the end of 2023? Now what's going to happen with interest rates, do you think?
I think everybody a lot of the economists have all sort of predicted the same sort of thing. Everyone was anticipating the cash rate to reach 4.1 by sort of June this year. That's still a possibility. We're at 3.6. May, June, 2 more rate rises, it would go to the 4.1, which is what sort of like the likes of NAB and CBA and those have announced. Some of the banks are also only predicting it to go to 3.85, so that's only 1 more rate rise. So everyone's still only predicting 1, maybe 2. I reckon we'll see in the next RBA announcement where they'll have more clarity with the data that's actually coming through. Again, you've got to think today's only the 4th, so they've only had couple of days to actually get through sort of March's data, so it hasn't been properly vetted yet. So in May, I think we'll get a much clearer, direction of what's going to happen. But moving forward, I still am a firm believer that we're going to see some rate rises probably by Christmas time. Rate cuts before Christmas time, and then most banks are all predicting about a 1% rate drop, so 4 rate cuts over the next sort of 18 months.
Okay, very, very positive. So if we do get another one in May, if they do decide to increase rates, would it be 0.25% or would it be 0.5%?
Well, the RBA did sort of announce that they're going back to their original roots where the movement of the cash rate in Australia was predominantly in 0.25 increments. So, which is what they've been doing was 0.5, 0.5, 0.5, and then 0.25 and 0.25 consistently. So I think if they're going to make any movements, it's still going to be in that fashion of 0.25% up and 0.25% downs.
Okay, excellent to know, because obviously there's a big difference for a homeowner between even 0.25% and 0.5% rate rise. So there's a significant saving if they do pop it up. If they only pop it up 0.25%.
I don't think we'll see movements of 0.5, not for a long time. I think there'll be just very small increments of moving the cash rate up and down, just essentially to stem that inflation so that we can get back to, and the basis of inflation in Australia and in pretty much any economy is to be between 2 and 3%. And we're currently sitting at 6.8 and we were up around sort of 8%. So there's still a lot of work to go, but it's doing what it needs to do. So we have seen inflation has peaked in Australia and is on the decline, which is exactly what the RBA wants. If it continues in that trend, then they probably won't need to lift any more interest rates. But if it sort of starts to plateau and we're not seeing it drop as fast as what they're wanting it to do, then we may start to see that sort of rate rises again.
Okay, all right, mate. Super informative. I'm so glad that you were able to pop in. Like you said, we're basically filming this within sort of half an hour of the Reserve Bank dropping their decision. So we're going to continue to do this on a monthly basis, where we'll have a podcast straight after the announcement, so we know exactly what's happening. We can get you the most latest up-to-date information, so you know exactly what's going to happen in our property market here in Australia. So to all our viewers and listeners, thanks for tuning in to hear and see what we're talking about here on The Couch with Steve. Special thanks, as always, to our guest, Steve Beach from Stanford Financial. Steve does an excellent job and a supreme authority on what's happening in the marketplace. Very good if you would like a loan too, by the way. So that's their core business. So they're in the mortgage industry. So if you need some help, Steve Beach from Stanford Financial, he'll help you out. So if you have an opinion about what we've discussed today, please share your thoughts on our socials. We really look forward to that sort of feedback. And stay tuned for more with On the Couch with Steve.